What's up, everybody? Just want to go over the new Smart Money Concepts version 2. Now, I use this literally every single day on an NQ 5-minute chart. It's always up on the screen right here. And it's one of the main reasons why I have days like I had today, like where I was up $33,000 on one account, $1,000 up on another account. On my other 50K accounts, I was up $250. And so I really like Smart Money Concepts, and I just wanted to kind of go over the Smart Money Concepts V2 in this video and show you kind of how to use some of the useful features in it and how I personally use it as well. To load Smart Money Concepts version 2 onto your chart, you're going to go to indicators, and then you're going to go to your invite only scripts, and then you're going to find the one that says QuantVue Smart Money Concepts version 2. Once you have it on a chart, let's go ahead and make one change before we start jumping into the settings to display the trends and trend colors correctly. You'll see what I mean in a second. If I hover over this ribbon, you can see that we have this nice, beautiful kind of trend momentum color going on. If I hover off of it, it disappears. So if you want that to always be displayed, you're going to go over here to where it says object tree and data window. Click on that. Click on the Smart Money Concepts version 2 and drag it above the candles. This way it will display in front of the candles, not behind. And now your candles will look like that. Jumping right into the settings here, the first thing is that we have EMA bands or EMA clouds and the momentum color of the candlesticks. I personally like to change my moving average length to 21 instead of 20 for this. And it's kind of just the idea that you have this deviation from a 21 moving average that's going to formulate these clouds. And a lot of times when we come into these clouds, we're going to be looking for longs in these clouds. So I don't know if you've ever heard the term needle in a cloud. That is a needle in a cloud, looking for a long push out of there. Now, typically the clouds do really great, except for when we have really strong downtrends that are constantly pushing out of the cloud, right? Or when we have a really strong uptrend that's always pushing out of the cloud, right? So it kind of makes it hard to, traditionally how you traditionally use it, when it's here. Personally, I don't use the clouds on my screen at all. Today was kind of another example. We pushed out of the cloud and we're just kind of going. When we push out of a cloud, it is typically not a good sign to try to short it. If we're pushing in a cloud a lot of times and we come up, this is usually a great zone, a great area to look for a long or a short, right? But it's when we push through, like when we push through here, this is a really strong downtrend, this means. And we're going to probably just continue going down. So I'd be very hesitant on taking longs when you're pushing out of the cloud. See, push out of the cloud, even though we came back in, we just push right back down. So when we start trading out of the cloud, you kind of got to be very careful about taking scalps in the other direction. Again, one of the things I tell people not to do is catching a falling knife, which is something that I feel like is easy for people to try to do off clouds alone. So personally, I don't use them, but if you like using clouds, by all means, they're there. They're great, but you just have to know how to use them. Next, we have the momentum color, which is just the color change from buyers and sellers, kind of buying on the candlesticks. I actually really love how this is displayed. So you can see like this whole bull run up. There's almost no momentum to the downside, but you can start seeing momentum to the downside up here, right? Like once we start to really drop sideways, this is after the market closes. But I actually really like how this is displayed on the chart. And a lot of times I almost always have this up on my chart. The next thing is ribbons. Trend ribbons specifically. I personally don't use trend ribbons. I used to, and I can tell you one of my favorite things to do with the trend ribbons, which is this bull signal here, this bear signal here, is personally, I really like to use it on very low sensitivities and use it as an exit signal, right? And so in Q5 minute, I'll give you an example. I'd probably put this on 0.5 right? And I would be looking to take a long at the change of character right here off open. So I would be in for a long here, and I would just use this as a trailing stop. And as you can see, if you use that as a trailing stop today, literally would have never got stopped out, right? Kind of the same thing here. We have a break of structure, a change of character, go to the downside. You're not going to exit this position till you get that bull signal. Again, personally, here's another thing, is I don't like having bulls and bear signals on my screen. So I would turn that off as well. So I just have this nice clean ribbon and kind of use the ribbon as a trailing stop loss guide. That is one of the ways that I personally really like to use the trend ribbon on NQ 5 minute. For now, I'm just going to go ahead and turn off the trend ribbon. Next, we're going to move into market structure. We have a thing called trend color, which is just a way of coloring the candlesticks. I personally just don't use the trend color. I very much like the momentum color instead. For liquidity, I do always keep this on. Now, this is basically showing you and identifying kind of where there is potential liquidity grabs. And so I can just zoom into the chart really quick. And you can see this wick down is a liquidity grab. And usually when you have a liquidity grab, right, then you just directly followed by a push in the opposite direction. So liquidity grab, little push to the downside. Liquidity grab, little push to the downside. Liquidity grab, push to the downside. Liquidity grab, kind of a push to the upside, but not really, very small. This is 9 p.m. There's like no volume. Liquidity grab, push to the upside. Liquidity grab, push to the upside. So you can kind of get the idea. Liquidity grab, push to the downside. Very, very useful to keep up on your chart. So next we have bullish and bearish signals on the market structure. Now this is the dotted lines here. This is going to be a breakout of structure, BOS, and this is going to be a change of character. Now, I don't want to go super in depth on how they're different, right? Just know that the red ones are going to be bearish signals and the green ones are going to be bullish signals. Breakup structure to the upside means that it formed a higher high, basically, or a lower low. The change of character is typically followed by a higher high, right? And then a lower low. And now if it breaks that low, that is a change of character. So you'll typically see, this is a change of characters on the upside, but right before that, we formed a new low. So it was a lower low, then a higher high, and then that becomes a change of character. And it's also calculated off a previous period of time. So the next thing is going to be order blocks. Now, order blocks right here are going to be these green blocks that form right there. A lot of times these can be levels of support or resistance. So you can see that we have this nasty resistance zone right up here. And down here, you can see that we have been creating new support levels as we go up on the day. So I just wanted to go over the market structure before we move on here. One of the things is that we can see how these all kind of work with each other. 4:30, we have a 4:30 a.m. today. We had a very bullish kind of push off this level, right? And so what I'm going to do is kind of just mark it with a trend line. We have a nice trend line. We are formulating order block zones over and over and over. At the same time, we are breaking change of characters to the upside. We have a break of structure to the upside. We have another break of structure to the upside. We have another change of character. This is in the manual section, but we'll go over that in just a second. But we have a change of character, again, breaking to the upside. When you're seeing this happen over and over and over again, leading into market open, this is going to probably have a very, very extreme bullish push out of here. Now, if we did on market open come back, right, and came back down, where would you potentially be looking to potentially take a long, knowing that this is going to continue playing out? Literally this order block zone. This would be a great entry if we came back down and broke through that BOS. If we broke through this breakup structure and we started pushing back down and didn't respect that breakup structure, there would be a very high likelihood that we'd probably push all the way back down to this order block for a push out of there. Or this order block lining up with the trend line would have been a beautiful play. That's not exactly what we did. But here you can see how these things will play on each other and can lead into a very, very high probability setup for a long or a short. Now, we're going to go ahead and jump into the next section, which is manual structures. Now, for manual structures, I typically keep the period on 20. And I typically keep my settings just like this, but I will turn on order blocks. I will go ahead and make the order blocks a slightly different color here so we can see them a little bit differently. So I'll turn that one to teal, and I will turn this one to like a pinkish color. And we'll go ahead and turn those on so you can see how those show up. And then the bullish and bearish signals that you have here are literally going to be these bigger, the solid line change of characters here. The solid line change of character here. This breakup structure here. These are going to be bigger moves, a lot of times much more heavily respected, and very, very, very much something you should be aware of. You can see breakup structure to the downside here. We really make a push down, right? Change of character. We make a huge push out of it, right? Now, keep in mind the times of days here as we look at this right here, right? We have a change of character to the downside. We break it, right? But this is at 4:30 a.m. We're also coming into this order block zone here. We wick almost the top of the order block and we form another order block as well. Now we're coming back up. Now this change of character is kind of invalidated. And now we're formulating a nice trend to the upside. We have a change of character that lined up right with 9:30 open. If you started taking longs here, what I did this morning was I took longs pretty much right off market open, and I made my stop extremely tight, thinking that if we would push down, I would either be willing to try to take an entry off this zone here for a push up, or just wait for confirmation that we're going to push up and close above this change of character again for the push out of there. But this is kind of how I personally use it. This is fantastic. This by itself is one of my favorite things to always keep up on a 5-minute chart. So next we have fair value gaps. Now, personally, I use fair value gaps, but I only use them on a 15-minute chart, and I have nothing else on that screen or on that chart but fair value gaps. I do not use it on a 5-minute. I don't find it very useful on a 5-minute. So if you want to use them, they're there, but note that when you turn them on, it will turn off the order blocks. So if you want to display the fair value gaps and order blocks on the same screen, what you need to do is just copy the indicator, right? And then just go ahead and turn everything off but fair value gaps on this one. Let's go ahead and do that. So turn on fair value gaps. And I'm going to just go ahead and turn off this so you can see what the fair value gaps are. They're these blue and yellow lines. And I personally like to make it 500. 500. And you'll see how they're displayed here. Now, what I like to do is keep this on a 15-minute chart, so it will look more like this on a 15-minute chart. I find this very useful. These lines that are in the fair value gaps right here are as the 50% mark in the fair value gap. So you can see that part of this fair value gap has been taken out already. And you can see part of this fair value gap here was already taken out. And so it's very, very useful, I think, on a 15-minute. On a 5-minute, don't think it's that useful. On an hour, I also think it's useful. So higher time frame charts, I find fair value gaps are more useful, and maybe I might go in a more in-depth video on fair value gaps and how I use them. but they're there for people that want to use them. That's how you would use the fair value gaps. Going back over to the main indicator, the next thing we have is previous highs and lows. This will just display the highs and the lows on the week, the daily, the monthly, the yearly, and you can change the color. Personally, if I do use them, I typically will put the lows, so the highs I will put as white, and then the lows I will put as like this gray. And so it will look very, very nice, and it won't like, I don't like having too many things that are green and too many things that are red. So you can see there's the day high right there. There's the week high. And so I just kind of like having those levels there. They're not too distracting when they're gray and white. And then the last thing is going to be time zones. Time zones will just allow you to put borders. Personally, how I like to set up my border. First off, if I just click borders and then click New York, this is an hour off. So I just like to dial my time manually. So I just click New York, America, and I'll just go ahead and put 9:30, and then I will put 1600 here. The way that this is calculated, the boxes, it will close, it will open correctly, but I think if you want it to go out to that last candle, right? Because it will go up to that 355 candle, but won't go out to that 4 p.m. candle, I think. Let me just make sure. So there's your 355 candle. If you want it to go out to that last candle, you can just come in here and you can type in 6:05, so just make it 5 minutes. And this just has to do with how the box displays with how the candles are calculated. Anyways, but that's kind of how I like to set that up. And what I also like to do is I like to not to be there almost at all, so I almost turn the transparency up to 99, and therefore it's just kind of like this little blue box that just lives there. I'm very, very much like keeping that on. And so for the most part, these are the settings that I tend to rock with on my 5-minute Smart Money Concepts on NQ. Now, keep in mind, you can use Smart Money Concepts on anything. You can tweak the settings to make it fit your time frame, your whatever symbol or ticker that you're setting up for, right? The other thing that is very fun to do is look at this out on a 4-hour, right? Let's look at it on a 4-hour. You'll see where these order blocks are going to form up here, right? So we have this order block forming on the 5-minute. You can see we're very red down here. We have this nice W pattern on the 4-hour. I really like how this looks. This is the contract change here. But right here, you can see where we had this change of structure on the 4-hour, and then this huge move to the downside. So you can see this break of structure here, and with this huge move to the upside, break of structure here, move to the upside. Let's see if we can go further back. Change of character here, huge moves to the upside. Change of characters here. See, this would be hard. This is kind of like, again, you have to look at the time. This is 2 a.m. So right before London gets all its volume. I'd be wary of this. But once we come up and we come back down during London session, and New York open, and we close underneath that, that's looking pretty strong to me. And then followed with a break of structure. So using this on higher time frames is also fantastic. Now, keep in mind, I didn't even tweak any of my settings here to use this on the higher 4-hour time frame. This is just the settings that I already had dialed in for the 5-minute. This works so well, and I highly, highly recommend that you keep this up on higher time frames, right? And that you're constantly looking at it, because it's really, really useful. I mean, breaks of structures, happen all the time, and then they're usually followed by pushes, and especially on the NQ 5 minute. I highly suggest, if you haven't already looked at the smart money concepts on the 5 minute on NASDAQ or even on ES, you might have to dial in some more settings. Highly recommend it. Anyways, that's going to be it for this video. Make sure you guys like, subscribe to the channel if you haven't already. And if you want to check out QuantVue, there'll be a link down in the description below. Peace.